Our next guest says the release didn't excite and says it might be time to buy the dip on some other discounted tech stocks. For more, let's bring in Ross Gerber, President and CEO of Gerber Kawasaki. Ross, thanks as always for joining me. One of my favorite reactions was somebody saying that whole event by Apple, it could have been an email.
Yeah, they've been doing this for some time. I don't know why they have to have events for these things when we're just watching videos anyways of most of it. But it's really mostly about these incremental, change events where there's really nothing new or revolutionary that they're like promoting. So that's really what I question is if Apple isn't really prepared to release AI features, then why even have an event? And until Apple can really clearly say this is the value proposition of buying a new phone, where I still think we're on a pretty normal upgrade cycle.
So, the iPhone has been sort of just a lackluster thing for a while, but still something everybody desperately needs every couple of years. And the stock finds a way, right? It finds a way to all-time highs. Is it one that you just continue to hold because fundamentally it's a good business?
Yeah, and Apple's a cash flow king, and it returns all its capital to shareholders, so it's an extremely shareholder friendly company, and they have opportunities that they can exploit if they're more aggressive. And especially they've really gotten quiet around Apple Vision Pro, which we think has a lot of opportunity, but they just are not 100% committed to this being a game-changing product. And a lot of that comes around building a lot of content for it. But that said, Apple has a great business, and I think the only knock to it is it's at a premium valuation now for Apple, which I think is warranted considering the AI revolution around the corner, but you're certainly not getting like a deal buying Apple compared to some of the other tech stocks.
So you talked about maybe buying the dips in something. Google just is one of those dips. It has pulled back more than 20% from its most recent peak. Do you feel comfortable getting in front of Google at these levels?
Yeah, Google's kind of an interesting play because on the upside for Google, they're just doing phenomenally well, and Waymo works and is the future of Robotaxi in my mind right now. And I think Google has a lot of opportunity in AI as well. But I think with the antitrust issue in the Justice Department, and you look at Microsoft, it kind of held Microsoft back for a decade, all the lawsuits and Steve Ballmer's, sort of poor performance. So what I worry about is Google gets stuck in sort of a rut for a period of time because of all the issues that they face. So that said, I think that's in the valuation of the stock. And when you look at like 17, 18 times forward earnings for Google, that seems absurdly cheap. And investors should own Google in their portfolio. So this is certainly a time to assess that.
Let's talk Oracle, which is the real belle of the ball today, surging, best performer on the S&P. Another record high. As it seems, they're really talking about this being the early innings for their data infrastructure business. Do you think of it that way?
Yeah, I do. And we've been investors in Oracle for, 6 to 8 months in my fund GK and at my firm. And, we saw it as this is kind of a boring company with sort of these data center business. And then all of a sudden they bought Cerner Healthcare, and then boom, AI comes rolling around the corner, and Oracle goes all in and upgrading data centers and renting them out to all the different players. And the rest of their business is boring. But when you look at their data center business, all of a sudden it's growing at over 20%. And has a lot of potential. So Oracle is another example of a stock like Apple. It's an old-time player, but now getting revitalized with all this new investment in AI. So its valuation has now moving, more towards the Apple PE ratio, but still, I think a great opportunity for investors.
I thought it was astounding that you had Larry Ellison speaking about the number of centers that they have in operation and under construction, more than 160, but even suggesting that the market can handle maybe 10 times as much. Do you kind of think about it the same way?
Well, so I'm not, like a tech entrepreneur. I'm an investor. So I have to parse out what's, hyperbole and big talk, which tech investors, tech titans like to say, versus like what is quantifiable on the short and medium term. And what I think is that Larry Ellison is right, that if we're really going to upgrade all the data centers in the world and make all this data useful, it's going to take a tremendous investment that will take a decade in my mind. We're at the beginning of this theme, and investors can't think short term when you're making an investment into Apple or Oracle or Microsoft, for example. Investors have to think long term and say, wait, here's this theme that could actually change the way we interact with computers and eventually the way we live our lives. And there's so many use cases, whether it's robotaxis or iPhones that can sort pictures better, but AI is going to be, influencing our life in many ways. So there's a huge opportunity for investors, and my fund is one way to play it, or buying individual stocks. But the best thing to do is meet with your financial advisor and get some advice so that you're not missing out on this opportunity.
So everybody talks about this opportunity. Recently, it seems like AI fatigue has set in, particularly with these large caps, right? They've underperformed the S&P. They've underperformed the equal weight S&P over the last 3 months. Are you worried about that?
Honestly, 3 months goes by so fast at my age, it seems absurd to even quantify things in such short-term time frames. So what I look at is a 1-year chart, and if you look at these big cap stocks, they've crushed it. So, that's where we're at. Stocks take a breather. 30 PEs for Microsoft and Apple seem appropriate, so earnings have to go up for the stocks to go up. And that's what we're seeing, is earnings are going up. So when you look at stocks like Broadcom or Nvidia and you look at their forward PEs in the mid 20s and them making their numbers over the next 12 months, these stocks maybe are absurdly cheap. So, once again, I think they're going to have to prove their pudding now that valuations are high, but I think they will. And so that's where the opportunity lies for investors, is if these companies deliver over the next 12 months, there's plenty of gains for investors to make, especially with lower interest rates coming.